assumptions. Finally, in this session, I'm delighted to welcome one of my favourite economists, Julian Jessop. He's an independent economist, but he's also a former Treasury man. Just one question on the politics before we come on to the economics. I mean, I've been in the game a long, long time, but to hear someone like Claire, who's a Tory councillor and a former Tory special advisor, saying, I've never felt more gloomy, and Geoffrey Clinton-Brown saying, well, I haven't felt this gloomy since the 92-97 government that handed over power and a very healthy economy to Tony Blair for a decade. Blimey!
Well, I think that's a good point. I think at the end of the day, politics is often primarily about economics, and people are seeing headlines about, about recession. They're seeing headlines about interest rates going up, and now they're seeing headlines about tax increases and spending cuts. So there's a real danger that we damage what are called the animal spirits in the economy, business and consumer confidence, and we end up making a bad situation even worse.
The starting point then, because I follow you very closely, as you know, online and in pieces that you write as well. Do you share my worry that actually it's not quite as bad in terms of the numbers as the Treasury would have us believe? I mean, you recently wrote a piece pointing out how our debt and borrowing compares to the average of G7. And actually, we're in trouble, but we're not in the deepest of water ever.
Yeah, I think that's a good place to start. I mean, these numbers, 30, 40, 50 billion that are being tossed around for the black hole, they're basically made up numbers. In particular, They depend on sort of 5-year forecasts for economic growth and inflation, and all sorts of assumptions in there about interest rates and commodity prices, particularly gas as well. They also assume some fiscal headroom in there of maybe 10 billion, which is basically the Treasury thinking of a number, then adding a bit more. And they're also based ultimately on fiscal rules the government itself makes up. If it had a different set of fiscal rules, it would come up with a different number for what that black hole is. So I think there's a danger here of the bean counters and abacus economics coming back again. We end up, setting policy now on the basis of assumptions and models that, frankly, are not very reliable.
Absolutely, 100%. Both assumptions, as it were, what Liz Truss used to call the Treasury orthodoxy, but just park that for a moment. But also another thing that you've written very powerfully and authoritatively about, and Liam Halligan bangs on about it too, is energy prices. There is an assumption of the price of energy within all of this at the moment that's actually falling, and it's falling quite fast. So the bailout may not be as costly as the Treasury is assuming, and yet they're still going to raise taxes and they're still going to cut public spending.
Yeah, exactly. I think there are two reasons for being cautious now. I mean, first is the economy is sliding into a recession. And it's worth stressing that those gloomy Bank of England forecasts didn't actually take account of the prospect of additional tax increases and spending cuts because the details aren't yet known. So now's a terrible time to be raising taxes and cutting spending. The second point is you've got all these extra uncertainties around the global economy and energy prices in particular. So it's very odd to have a sort of fixed view on what the deficit is going to be in several years' time, or the debt to GDP ratio, when you really don't know even what's going to happen over the next 3 to 6 months, particularly with things like energy prices. So I would be far more cautious than the Treasury is likely to be. But, unfortunately, I'm rather in the wilderness at the moment, or the doghouse, and they're probably not going to take any notice of anything I'm going to say.
Oh, as we talked yesterday on the programme about the dangers of think tanks, but I think you are still listened to. And I was going to ask you about whether I'm right to be concerned about the dangers of raising taxes and cutting spending as far as the recession's concerned. But I'm going to end instead on just one very, very quick question to you, if I may. And that simply is, you as Julian Jessop, independent economist who knows the Treasury inside out, how gloomy are you, short and medium term?
Well, I'm not as gloomy as some. I think there are good reasons to think that the UK economy is pretty resilient. We actually saw that during the COVID lockdowns, that each time the economy bounced back more quickly than anticipated. I think there are good reasons to expect global inflation to fall a lot more quickly than some people fear. So I think personally the Chancellor's approach here should be what doctors are supposed to do. First, do no harm. And I think it does look like he's actually going to do harm by raising taxes and cutting spending before he has to, on the basis of some pretty dodgy assumptions.
Brilliant. Absolutely brilliant. Just what I'd hoped you would do, Julian. Thank you very much indeed. Julian Jessop there, independent economist, a man who knows how the Treasury works. Look carefully at those assumptions and don't do anything, Mr. Sunak, that will further damage the economy.